Welcome back everyone, my name's Steve and welcome back to another episode at My Crypto World, where we discuss everything crypto and blockchain related. If you'd like to see more news articles, please drop a comment in the comment section below and let me know what you'd like us to cover. We try to upload 2 to 3 videos a week discussing everything blockchain and cryptocurrency related. Today we're going to be looking at a new arm for the NASDAQ. Pretty exciting. It certainly will be a big contender in the cryptocurrency space. We're going to talk about what Cardano creator Charles Hoskinson thinks about the current market and what could end the current bear market and turn it into a bull market. We're also going to look at another hedge fund that thinks Bitcoin has finally bottomed out, and some interesting news regarding Chainlink that may make non-Chainlink investors second guess and maybe want to go and invest a little bit of their money into Chainlink with a new update to that story. All that right after this. Hey everyone, okay, welcome back. So let's kick off the first story today. NASDAQ's new digital assets team will initially offer custody services for the top 2 cryptocurrencies to institutional investors. Now, the top 2 cryptocurrencies obviously are Ethereum and Bitcoin. The top takeaways from this is that NASDAQ is launching a crypto custody arm. Number 2, NASDAQ Digital Assets is hoping to take advantage of the institutional market's growing appetite for digital assets. And number 3, the institutional interest in crypto has grown since the space boomed in 2021. The world's biggest stock exchange is placing a bet on digital asset growth in the hopes of benefiting from growth interest in the space across the institutional market. According to the Bloomberg report, NASDAQ Digital Assets will initially launch with custody services for Bitcoin and Ethereum. The new arm will be led by Gemini Alumis Ira Arkbach. I hope I haven't butchered that name there. And the company has plans to expand the team to 40 people by the end of 2022. So this is all happening right now. Although the crypto market, the article goes on to say, has had a rough 2021 with Bitcoin and Ethereum and most other major assets trading over 70% down from last year's high, Wall Street has increasingly taken an interest in the market, citing growing demand for Bitcoin and other crypto assets in the institutional market. BlackRock, the world's largest asset manager, partnered with Coinbase and launched a Bitcoin trust fund last month to help its wealthy clients gain access to crypto. While the crypto prices skyrocketed in 2021, most of the marketing activity that helped assets like Solana and Dogecoin soar came from retail participants, so your mum and dad type investors rather than institutions. So obviously the NASDAQ are hoping to change that by allowing more and more large institutions into the crypto space. During crypto's 2017 bull run, the institutions are coming became a popular meme in the crypto space as early adopters placed their hopes on the technology, attracting bigger players in the future. Last year's developments changed the narrative as it became clear that major funds and corporations were paying close attention to Bitcoin and the broader crypto space. NASDAQ's new digital assets arms is further proof that institutions are no longer coming, they've already arrived. And look, we've covered other articles off in the past as well regarding large institutions getting into crypto assets as well. So the fact that NASDAQ are looking at this is really interesting. It looks like it's going to kick off fairly quickly, I would imagine. The second article that's happened recently is the Cardano creator Charles Hoskinson has named his catalyst that he believes could end the crypto downturn, which is what we're all waiting for at the moment, and it may even trigger a bull run. The creator of Ethereum, Challenger Cardano, which is ADA, has said that he's identified the catalyst that would end the crypto winter and spark a massive industry-wide rally. In a new interview with Cheeky Crypto, Charles Hoskinson, creator of the smart contract platform, says that if US governments were to pass the Financial Innovation Act, the crypto markets would begin a mega bull run. If America passes the Financial Innovation Act, we'd probably see a mega bull run because a huge amount of institutional money would enter and also all of the regulatory risk with crypto would disappear. The Financial Innovation Act, which was proposed by Republican Senator Cynthia Lummis, as well as Kirsten Gillibrand of New York in June, aims to create a comprehensive regulatory framework for the digital assets industry. However, Hoskinson notes that it is possible for the markets to go either way if certain regulators, such as the SEC, Chairman Gary Gensler, are further empowered to do what they want. Now, it's interesting that this article has come out after the NASDAQ article came out. An exchange like the NASDAQ would not start making moves in this area if they knew that something wasn't going to be happening in this space. This is how I'm reading into it. So my bets are that the Financial Innovation Act may get passed at some time in the near future. Obviously, this is my investment opinion with all the articles and everything that I read on the news about crypto space and blockchain assets. So it's looking very, very positive. We do want more and more large institutions and wealth providers to come into this space. It will help strengthen the entire ecosystem of the crypto market. Second last article that came out is the one regarding the Morgan Creek Capital Investment founder and CEO Mark Yusko. He thinks that the crypto rally's already seen the worst of the bear market when Bitcoin slid close to 17,000 earlier this month. He goes on to say that he actually does believe the crypto winter is over. I believe we're in crypto spring, and I believe we have seen the bottom. That doesn't mean we can't retest it, and it doesn't mean we couldn't go a little bit lower than that. But I really do think that the cathartic wind of the leverage in Bitcoin happened, and I do think we're having a little follow through here with the buy the rumor and sell the news about the merge. Yusko says that even if the Federal Reserve decides to keep increasing interest rates, it will have a limited impact on global prices as the downturn batters nations worldwide. So in a sense, what he's saying there, if the Federal Reserve decides to hike up interest rates higher, making the cost of living harder for families, obviously we're talking about the United States, but it does happen around the world, it won't really have a great impact on the digital assets because that sort of stuff is happening worldwide. So it's the same for everybody. It's not like America is worse off than any other nation when that sort of stuff happens. He finally says he thinks we're in a recession. Now, we spoke about how I think we're in a recession last week. It just hasn't actually officially been announced yet, but it's interesting every time when you look back in history when there's an announcement that we're in a recession, it's official, the recession's here, it's usually at the bottom of the market. He goes to say that I think we're in a recession. I think that because of that, the Fed will reverse. And when they reverse, they're going to have a face melter of a rally. I mean a real face melter, because the shorts are going to get scorched and the amount of shorting in crypto is massive. So that's three really positive articles that have come out this week. One regarding NASDAQ, one regarding what Charles Hoskinson said about the new act that they've launched or wanting to launch in America, and the third one being a veteran hedge fund analyst view on the crypto space. Finally, we'll finish off today with a couple of other articles. First one is regarding Chainlink. Now, I've done a few stories in the past on Chainlink. I probably haven't covered any news really. Nothing credible. Not I say credible, but nothing large or nothing mind-shattering regarding Chainlink for a little while. But this story made me wake up a little bit. So it goes on to say that the popular blockchain Oracle network's new build and scale program set the stage for the Link token staking to begin in December 22, says co-founder Sergey Nazarov. Now, this is related to Chainlink. Chainlink, a provider of price feeds and other data to blockchains, is reducing the network's barriers for entry for early stage projects and reducing the cost for existing participants ahead of the introduction of staking of its native token at the end of this year. Now, this is the part that woke me up. The smart contract Oracle network that powers much of the DeFi is offering a build program where up-and-coming teams donate 3 to 5% of their native tokens to the network in return to access to Chainlink data. And for those already initiated, the Scale program aims to reduce on-chain transaction costs associated with smart contract oracles to near zero. Why is this interesting? Well, number one, if you're already on the Cardano, if you're already on the Chainlink and you're using it, your transaction costs are going to get a lot cheaper. But furthermore, for all new up-and-coming projects, if they look at the Chainlink blockchain and they feel like it's something they could work with and they might need for their project, imagine the size of Chainlink in 5 to 10 years' time if every project on there has donated 3 to 5% of their native tokens to Chainlink. How much is Chainlink going to be worth? And it just, you know, when you ratify that out, when you expedite that out, into the future, you can imagine how much pull Chainlink will have on every single project. It actually is getting its paws into a piece of everyone's pie, so to speak. So that, for me, is a real game changer, and it could see Chainlink, Chainlink's prices boom. To be honest with you, with that type of news. The Chainlink community hopes any disparity can be addressed by its new programs, as well as the introduction of link staking and rewards. Chainlink staking is slated to get underway in December. So again, it's something that's happening before the end of this year, but it looks quite exciting for link holders if you happen to be one. Now, 2 final articles. I just wanted to share these ones with you. This was on Twitter. Congress not looking to ban crypto as it has too much money and power behind it. This came out earlier this month, and I forgot to bring this up in my previous posts. But US Congressman Brad Sherman admits crypto has too much money behind it to be banned, even though he sees it as a threat to the US national security. So if you think crypto is going to disappear, think again. He said it all. It's got far too much power behind it at the moment. The last thing that came out about a month ago, probably a little bit more now actually, was this info slide. And it just talks about the top brand intimacy in 2022 based on social media rankings. So, you know, social media being what's discussed on Twitter and YouTube and Facebook and Instagram and all those things. So number 1 is Disney. Probably no surprise. Number 2, Telstra. But as we go down, you can see all the recognisable Trader Joe's. I mean, I don't know what that is. Somebody will. You can see all the recognisable companies in this list as the scale goes down. But what caught my eye was number 26 is Cardano. So ADA holders again. Charles Hoskinson's is considered to be a top brand intimacy for rankings in 2022. Bitcoin was ranked at number 30, even above ESPN, which I can't believe, but it is. And I think that was the only 2 in the top 100 from memory. I'm just having a quick look now if there was anything else. I don't. I mean, those 2 even outranked Google, for goodness sakes. It just shows you the power of what's going on in the world at the moment, and for those 2 coins to be, or those 2 companies I should say, to be in this ranking shows you how far the crypto space has actually come. So all that's pretty positive news for crypto, guys. Again, if you are thinking of getting out, it's your own personal choice, and everything I've stated in this is only my personal choice as well, and personal investment opinion. It doesn't mean you should go out and buy everything straight away or sell your house. But I do hope you found this YouTube video useful. If you've got any comments, drop them below. I'll always try and reply. If you've liked our content, please give it a thumbs up and help us grow the channel. If you want more content like this just simply hit the subscribe button and you'll get notified every time I drop a new video. We'll see you in the next couple of days. Until then, take care. Cheers.